Hello everyone, welcome back to the channel. In today's video I'll be going over my free trade portfolio update. I've not done a portfolio update for a few weeks now, so I thought it'd be the perfect time to go over my free trade dividend portfolio for you guys now and just show you how it's been doing basically in the last few weeks. But before we get into the context of today's video, guys, if you're new to the channel, you can please consider subscribing. I talk about investing in personal finance, etc. And also in this video, if you like what you see, definitely consider smashing the thumbs up button, help boosting that YouTube algorithm out for my channel. So yeah guys, I'm going to go into my free trade dividend portfolio now. So I'm going to sort of change the format of how I do these videos a little bit. Usually I'll go over how the stocks have done over the last month or last 7 days and just break down why I think they've done bad or good, etc. But instead I'll be going over my activity first, so showing you what I've bought, what I've sold, or any dividends that I've received recently. So now we'll just head over to the activity tab and we'll scroll back down to start of July. So as you can see, on the 1st of July I received a dividend payment which was from Coca-Cola for £2.03, which again on the same day, or well, a few days later, I reinvested right back into the company, so exactly £2 into Coca-Cola, helped the dividend reinvestment plan on its way. So then I also invested in some fractional shares of AT&T, a company who I've invested a few fractional shares in recently, as I know they went to ex-dividend date not long ago, and I think they are due to pay out in August. So it'll be my first month really trying to see how the dividend reinvestment program's worked out for me, see how much extra dividend I've received, although it won't be much, but it is a long game. So, and then on the 15th of July, I bought a share of Shell, which was for £12.68, and 3 shares of BP for £9.36. The reason behind that is obviously oil and gas have been struggling a lot recently. Obviously, a lot of people haven't been travelling around as much, so obviously the oil prices crashed not so long ago. So I do think they still have the clout and they still be well needed for a long time yet, oil and gas. They won't be going anywhere for the foreseeable. So got the trying to average my down positions with BP and Shell, which I'll go over more in the portfolio update. I also purchased some fractional shares of Starbucks on the 15th of July, £7.95 worth, or 0.1325 worth, if you want to look it in per share. And then here's my sell. I made a sell of Walmart on the 16th of July, £104.50. My reason behind this was I was in quite a decent bit of profit with them, maybe about £20–30 for only one share that I own. And for me, the dividend, it doesn't quite have enough clout for me. I want to have something that pays higher, which is also relatively low risk. So I'll show you my next investments. So sold one share of Walmart for £104.50. And then I also bought one share of Royal Bank of Canada for £57.03, just over one share. I think they pay around a 4.5% dividend yield, around $1.08, I think it is, they pay every month, so that's probably equate to around 90p. So that's my first new purchase. Then I also purchased some fractional shares of Apple. Apple, a company I've been wanting to get into for a long time now. I've been obviously, it was at the start, I was deciding to invest in Microsoft or Apple first, so I went with Microsoft, but now I've finally got my foot in the door with Apple, so just hope that, obviously, to try and invest as much as I can with them at certain points. So that is the up-to-date with my activity, guys, now. So now we're heading over to the portfolio and check out how them stocks have done for the last month. Okay, guys, so now we're into the portfolio. It's currently worth £3,771.58. You can see quite a volatile month really. It's been plenty of ups and downs, but generally it has gone up. So obviously over the days, we've had some up days, we have some down days. A big down day on the 8th and 9th of July, but we picked up then up to the 13th, and we did actually get into quite a bit of green profit. £3,796 on the 16th of July, but now we've just gone back down again into the red just about. But overall, guys, if you look at the year, the portfolio is generally going back up, so it's good to know. So now we're getting to the stock. So the first stock is Advait. I own just over 6 shares and I'm up 38.12%. Advait been absolutely killing it last 30 days, especially good dividend yielding stock. Hit the $100 mark now, which as you can see is the highest they've been for over a year. The highest they've been in the last year was $95. You can see a big dip, but now they've really done well. Up 47% in the year. And my average cost is just over £57, so I'm up £133 in profit so far, although I don't consider it profit until I do take the gains out. Another company were due to pay me a dividend in the next month. So next up we have is Verizon. Verizon, I own 8.734 shares and I'm down 2.68%. Generally been struggling, not too much, but they've slumped 10% in the first 6 months of the year, according to the data from the S&P Global Market Intelligence. Obviously, the telecommunications stock has lost a bit of ground amid all the sell-offs due to the you-know-what virus, and it's also had a bit of a mixed earnings report. And I think it has closed a lot of its stores as well over there, so it's a bit of a difficult environment for mobile hardware and service upgrades. But obviously, in the grand scheme of things, the business has held up quite well. And I think, obviously, the telecoms sector is quite a strong industry, so I have no problems here. So that's Verizon. Next up is Microsoft. 2 shares currently on Microsoft, and I'm up 43.15%. Another fantastic dividend growth stock. Up just 3.34% in the last 30 days. And I'm up £96 overall with profit. Average cost £112.24. Same way with Colgate. I own 5.56 shares, 0.56 shares of Colgate, and I'm up 2.8% with them. Again, a company won't be going away for any time soon. I think we'll always need toothpaste as long as we're here anyway. So, yeah, Colgate. I'm up 2% with them. Sorry, £8.21. No recent activity with them. So the next stock on the list is AT&T. I own 12.45 shares of them, down 3.77%. Again, the telecom sector struggled a bit. They're down 8% in the last year. They was doing really, really well up until all this started going on. But the average cost is £24.89, and they currently stand at $30, which is around £25. So next up is Coca-Cola. I own 7.3248 shares of them, up just 0.33% in them. Another good stock to hold for the long term. Not much in movement in the last 30 days, and in the last year they're down 10%, but I do think they are slightly on the road to recovery. Same average cost is £36.95. The next up, guys, we have Starbucks. Starbucks are down 16.84% for me for the 4.2044 shares that I own. Again, obviously Starbucks, it's a very much pedestrian / people place to go, and obviously we've been stuck in for a while now. So Starbucks demand has been low and will continue to be low until the situation improves, and the revenue could decline by about 15%. Ending in September 2020, there's a reduction in meetings of friends, colleagues, dinners and drinks. And basically, obviously, no one's been going out, so reduced demand for them. But I do think they have the financial clout to recover from this. You can see I do think they are on the road back to recovery a little bit. They were down to $56 back in March, now back up to $74. So still some way off the heights of around just under $100, but I do think they'll get around to that again. So my average cost is £70.62, so I'm down £50 overall. So next up is Johnson & Johnson. Obviously, Johnson & Johnson, big blue chip company. They're up 11.7% for me. Up another 4% in the last month, and in the last year they are up 13%. Sorry, I keep looking at the price thinking it's the decimal, but sorry for that, excuse me. So yeah, my average cost is £105.88, and I own just over 2 shares, 2.06 shares. Another long-term hold for me, guys, Johnson & Johnson. Next wave is Ford. Ford have had a slight recovery in this last 30 days, finished up 7.42%. I think they're still not paying a dividend currently, but nice little bit of recovery. You can see they got down to around $4, which is really, really low. I think that's the lowest they've ever been, maybe. I'm not too sure if someone wants to correct me on that, but certainly in the last 5 years it's really low, but back up to $6.80. So I'm down £80 now. My average cost is £7.06 with Ford. Next up is Shell. Rolled at Shell. I own 10 shares of Shell, and I'm down just pretty much 50%. Which I did purchase that other share last week for, how much did I purchase it for again? think it was around £12. So yeah, in the last month they're down 6.33%. So let me scroll down for some reason there, guys. But yeah, I'm down 50% with Shell. And then Pfizer, I own 4 shares of Pfizer, and I'm down 0.71%. Average cost £28.91. Pfizer, another company, I think in the UK, they are working with AstraZeneca to find a new vaccine for the virus. And I think, I'm not sure, but today there's been £90 million worth of viruses, I think, virus vaccinations, sorry, which will be launched in the UK. I'm not sure when, but obviously they're up 9.06% in the last 30 days. So next up we have is PepsiCo. PepsiCo, I'm down 3.5%, just a 1 share owned, but they're up 1.42% in the last 30 days. My average cost is £110.50, so I'm down £3.86 overall. Another long-term holding play for me, guys. I do feel like the industries such as food and drink will really start to pick up again soon. So next up is BP. I'm down 34.89%. So guys, we're about halfway through the portfolio now, guys, so stick at it with me. We're not far till the end. So BP, down 34%, down a further 3.42% in the last 30 days. So I'm down, my average cost is £4.06. So as you can see, they're still only teetering around £3.5. Massive decline from the stock was probably around £6 at one point, well, maybe £5, so down 41%. So the next stock on the list is Imperial Brands. I just own 7 shares of them. Tobacco company, down 28.37% overall in my investments, and down 8.66% in the last 30 days. So my average cost is £19.58. No recent activity for them since February. So next is Oriental Income, which is an investment trust, down 6% overall on my investment. My average cost is £2.43 with 33 shares currently owned, and they're down a further more or less 2.5% in the last month. Next is my new purchase, is Royal Bank of Canada. I'm down just 0.39%. Just around a share, so they're up 3.17% in the last 30 days. So I think it's important to look at the year graph with these at the moment. So I think it might have been I've not fully missed the boat, I do think they're on the road to recovery. So I'd probably get them a bit late, so they did go down to around $54, and then I think now they're back up to around $70. So nice little increase on Royal Bank of Canada. So I do think they might get back up to around the $80-90 mark, anywhere between there. Same way with BA Tobacco, BATS, so another cigarette company who are down 14% in the last 30 days. I own just the 2 shares of BA Tobacco, average cost £29.76, and I'm down 9% with my whole investment. And next up is the S&P 500 Vanguard, which is up 12.68% for me. I purchased this back in, when was it now? I think it was the height of the pandemic, so well, not the height, but the decline in the stock market was evident at this point. Just the 1 share, and I'm up 12.68%. As you can see, the S&P 500 is pretty much back to its state it was before all this happened. You can see the nice little V shape there. So next up is Intel. Intel, I'd own just 1 share of them, up 26%. And they're down, not too much movement with them in the last 30 days. My average cost is £37, and I'm up 26%, or just under £10. So we've seen a bit of green in the portfolio, guys, in some stocks. Some are in more red than others, some in more green than others, but at one point I think I had about 5 stocks which were in the green for me out of 20 something. So now I think it's probably round even now, half each in the red and half in the green. Next is Apple. I own 0.153 shares for £46 worth. Up. They're up actually 9.5% in this last 30 days. Apple, obviously a big, massive dividend growth company, and I think they're more a growth company because they only pay a 2% yield, but obviously 2% of their actual share price is really, really good. $385 standing. They've had a really good year. So they've not only recovered from the pandemic, they've actually just soared even further than that, similar to Microsoft. So next up is Lloyds. I have 136 shares of Lloyds, and I'm 44% down. Lloyds they've not really had much movement. We started off the month at 33 pence and now only at 30 pence, but I do think, excuse me, I think Lloyds will rise again. Obviously UK banks lending out lots of money to governments to help pay for furlough schemes and whatnot. So Lloyds are a good one to try and get my average cost down. Next up is another bank, which is HSBC. Down, so obviously you can see a similar pattern with Lloyds. UK banks are massively down at the moment, and they'll all cut the dividends as well for the foreseeable. So you can see HSBC, I am down 2.18% in the last 30 days and 36.51% overall. I'm having a bit of an issue when I'm going onto certain stocks, guys. It's not letting me scroll down to see the whole picture, so I'm just trying to give you what I can see. There is National Grid for 3 shares currently owned, and I'm up 9.15%. But they're actually down 7.91% overall. Utility company in the UK. There you go, I can scroll down on this one. 3 shares owned, my average cost is £8.22. But I'm still up on my investment despite the little bit of a drop this month of just under 8%. And next up is Wells Fargo. Obviously Wells Fargo have had a massive fall. It's been hampered with low interest rates and fears of loan losses as the economic downturn is spurred on by the pandemic. It's forced businesses to shut down, but it has fared a lot worse than some of its peers, as I think the stock has dropped more than half this year compared to 34% with other banking companies in America. It's been closely watched by regulators following the scandal over fake accounts, and I think Wells Fargo have reported a current net loss of $2.5 billion, which includes $8.4 billion increase in the bank's credit card loss reserve, with $6.4 million allocated towards commercial loans. So obviously banks, a lot of money is being lost at the moment. Wells Fargo over the last year down 45%, which is massive. There was a $53 stock, $50 plus stock, now teetering just nearly at $20. I own just the 1 share, and as you can see, my average cost is £35, and I'm down 45%. Last few stocks on the list now, guys. I'm not going into much depth with these ones. Try and wrap this video up here. So next is Taylor Wimpey. I'm down 22% with them. 14 shares currently owned. My average cost is £1.81 with them. Then we have is Carnival. Carnival was doing really well for me. I was up 100% at one point. As you can see now, it's dipped back down to 50%. But I probably did get them at quite a good price. They're down a further 12, just under 13%. Obviously, cruise companies, there's not going to be any cruises for a long time, guys. So this one's just for a long run. I know the price is going to be more low than high, especially in the coming months. Then we have Greencoat UK, 2 shares owned. I'm up 5.91% with them. And then my final 2 shares are just basically, I can't really get rid of them because I can't make a trade for under £2 at the moment. So that's Bancora and UK Oil and Gas. So yeah, guys, that is the portfolio update today, guys. So as you can see, still over the year, we're on the way back up, hopefully. And in the last month, I'm still making progress. Still very volatile, but hopefully we see a lot more ups than downs over the coming months. So it's going to be interesting. I need to try and lower positions down in certain ones that I can, and obviously try and just keep investing as much as I can and growing. So yeah, guys, on that note, I'm going to leave it to it today. If you like the video, definitely consider smashing the thumbs up button, and if you haven't subscribed, also consider that as well. So I'm going to leave you there, guys. Take care.